Hello traders and welcome in this first episode of the SMC Trader free mentorship, which I'm gonna be uploading here for free on YouTube for each and every one of you to watch and learn from it and possibly profit in the markets from the most transparent trader. A small introduction for those of you who don't already know me from my other channel. ChrisFX, by the way, is my other channel. I am a very transparent trader. I'm telling things as they are. I do not promise Lamborghinis and Ferraris because all of those things are lies. Unless you have a huge capital already, I debunk myths around other traders, around prop firms, around which concepts are supposed to work and which do not work. And the aim of this long mentorship, which is gonna be long and too many episodes actually, is to teach you how to read the markets properly and how to profit from the markets by using the exceptional techniques that I'm gonna be teaching you. So be sure that 99.9% of the traders you praise out there are losing traders, and I mean it even for those who claim to be funded with hundreds of thousands. Yes, maybe they are after 2,000 losing attempts and they are still in loss. I guarantee that to you if they would show you the history of their account. This is exactly why they're not showing the history. So let's go ahead and start with this first episode of the SMC Trader mentorship, where I'm gonna be teaching you the most important things about market structure. Let's go ahead and begin with the video. As I said, this video, this first episode is gonna be all about market structure, okay? And of course, we're gonna be including some things such as fair value gaps as well. So I will begin with the importance of structure, and first of all I will begin the video by talking about timeframes and the importance of timeframes. Until now, what you have learned from other traders is that you have to do a top-down analysis. Correct, that is absolutely correct, but not the way they are teaching it to you, even though this is something you have heard probably 2 million times until now, that it's not correct the way they are teaching it to you, but I will teach it to you correctly. Well, yes, in this occasion, this is true, and I will explain exactly what I mean. You will see most of those traders will tell you, go to the daily time frame or go to the weekly, then go to the daily, then the 4 hour, then the 2 hour, then the 1 hour probably, the 30 minutes. The 30 minutes is showing something different, the 15 minutes is showing something completely different. Now, of course the market is fractal, let's say, and of course all the strategies that I'm gonna teach you work on all time frames, with the preferable time frame of entry in this mentorship being the 1 minute time frame. Nonetheless, you have to choose between specific, let's say 3 or 4 specific time frames. If you go ahead and start from the monthly and then go to the weekly, then to the daily, then the 8 hour, the 4 hour, the 2 hour, the 1 hour, the 30 minute, etc., etc., what you're gonna achieve is start complicating everything, and in the end of the day, you will not be able to win any trades, or you will be losing more than what you're gonna be winning, and by that I mean you are gonna be losing money in the end of the day, because of course you could be winning less times, but in the end of the day, because of the reward to risk, you could be making money. So let's start now that I have explained that you have to be using specific timeframes. Now, this free mentorship is gonna be enough to give you the first step, and it's gonna be a very extended mentorship. Probably it's gonna be more than 30 episodes, but of course I have very specific symbol entries which I'm teaching only in the academy, in the trading signals, and in the one-on-one mentoring. And believe it or not, I'm by far the most transparent trader on YouTube right now. And you can see it every single time that I'm going live. I'm doing the analysis, I'm entering the trade. It happens to be a winning trade, most of the times at least. At the making of this video, I only have wins on the free public trades that I'm making. I'm showing my account live, the withdrawals and everything. Who else is doing that? 0% of people. Anyways, let's move on. Now, what you're gonna do, you want to choose between specific time frames. So you wanna start, of course, doing your analysis from a higher time frame, but I would suggest that you go ahead and do your analysis, let's say the weekly, then to the daily, then you can go to the 1 hour, for example, and enter on the 15-minute. Or you can do any other combination that you have seen it is working for you. The aim of this video is not for me to give what other people have paid for. The aim of this video is for me to teach you how to read market structure. So, if I start here in this occasion, exactly right here, and we will be talking about this trade right here specifically. The one that I also took live and I showed it, of course, and here is some proof of it. So if I go ahead and open this video that you see exactly right here, you will see me taking this trade live on the YouTube channel. And of course, this was a winning trade. We closed our partials and everything. This is like a small proof. Let's keep going. In order for me to be able to show you what is happening on a higher time frame, I will begin by showing this trade only on one time frame. I will be using the 15-minute time frame. And of course, once I will have shown you how to read this market structure, we will be moving in another episode, in the second episode, and we are gonna be showing how to do the top-down analysis and all of that stuff. But the most important thing for today is for us to teach how to read market structure. Forget about all the other time frames. As I said, let's say that you choose one time frame. This, by the way, could have been the 1 hour time frame as well. Here you will see the same exact thing happening. There is a video that I have talked about grabs of liquidity with impulsive retracements back into the range. If I go ahead now and I show you this current example right here, even though this thing did not happen in a significant area of a higher time frame, which is besides the point of our today's video, you will see that after grabbing this liquidity over here and after grabbing this liquidity over here on the 15-minute time frame, we had something very important happening. What did happen? Excluding all the other time frames, looking only on the 15-minute time frame, and I will show you when we will scale on the 1 hour up to the 1 hour time frame that you will see the same exact thing. So it doesn't matter, choose one time frame to do, let's say, choose a series of time frames, which we are gonna be going through with the next episodes, of course, and then do your analysis only by sticking on those time frames. Here we are on the 15-minute time frame, as we said. We saw this grab of liquidity right here. We saw yet another grab of liquidity. So here there is a bunch of liquidity, guys. Okay, here was more liquidity, lower, let's say, less, let's say, liquidity. Actually, we don't need that many drawings. Let's say this is our first liquidity. I will do it like a little bit bigger. This is more liquidity, of course, way less liquidity below this low right here. And then what do we see? We see an instant retracement right back into the range. What do I mean by range? I mean two things. First of all, above those horizontal lines, if we extend the horizontal lines which are from the lows that we broke, we closed back into the range of both of those, even the significant one, which is this one right here. But one of the most important things as well is the fact that we did also change character. This is the so-called market structure shift. What does this mean? This means that when we have a structure such as this one right here, okay, and then we do that, instantly we have broken with a body or not with a body. We will see too many examples in this long form mentorship. We have now changed character. This is our so-called change of character or the so-called market structure shift. It is the exact same thing in other words. Does this resemble something? It does resemble this thing right here. Look, we closed above this swing high. And by the way, why is this one a swing high? This is a swing high because it is higher from the high to its left and the high to its right. But probably in the next episode we will go ahead and read price action and market structure exactly, so that we will be exactly at the same page. I just didn't wanna start this mentorship with some boring structure reading, so I will start with the important stuff to attract your attention, and then we will be proceeding with more and more and more examples. So I will be deleting this one, which is exactly this point right here. Now I will tell you two things. After we have broken above this area, and we have also grabbed more swing highs and more swing highs, as you can see, and this swing high, all of those swing highs, even though one would be enough, this shows even more strength. What we have left behind when we were exactly at this point, we had left a bunch of fair value gaps. One fair value gap, two fair value gaps, three fair value gaps. Okay, now I need those fair value gaps to be tested. What I need actually is those fair value gaps to be tested, because those are the ones which are closest to a discount. And if I extend that from here to here, you will see that I would prefer to buy from a discount. Is it necessary? No. And these are things that I'm teaching in the mentorship as well, plus in the trading signals. It is not necessary, but here we're gonna be teaching it like that. Okay, so what do we see here? We see, first of all, that once we came back, we instantly have a reaction from here. What does this mean? If we go ahead and scale down to a lower time frame, such as the 1 minute time frame. Of course, the time is not very favorable here, okay, because it is almost 4 o'clock, but what I can show you exactly right here, I can show you that we would have already had the chance to enter a trade. So if I draw the premium and discount again, we did reach a discount. We are a little bit below the 50% point. And now if I go ahead and scale down to a lower time frame, such as the 1 minute time frame, what we're going to be doing is identifying market structure. And this is going to be the point of this first video. And once we finish with this example right here, we're going to move a little bit forward, and then we will be continuing with episode number 2. I will be having a bunch of episodes, as I told you. Here we have our first market structure shift on the 1 minute time frame. Is that enough? No, it is not enough. Why? We want to see some more strength, but most importantly, you will see if price action is strong, if it leaves fair value gaps behind. This is now our new high. Let's check out how this, if this gets broken. Well, this is very, very impulsive. And what I can tell you is that we can go ahead now and enter the trade from this volume imbalance. Okay, you can either choose this FVG or this volume imbalance right here. And you might say, Chris, you are being all over the place. Some of you might be new to the whole trading thing and you don't even know what those things are. Do not worry, I want to attract your interest. I'm going through all of those things at the beginning, and then I'm gonna go through them analytically in the next episodes, in the next bunch of episodes, and I'm gonna explain every single bit of them. So do not worry at all. But the optimal entry here would be exactly right here. And this is not the entry that we took, because I'm not trading at 4 o'clock. My trading stops at 3:20, but I want to show you as a first example how this would have worked as well. And you will see the perfection of price testing this volume imbalance, which we are gonna be explaining in another episode. Boom! There you go. Now, regarding targets, of course, if you were to leave this thing running, you could go ahead for fixed 2-to-1, or you could close partials, as I always advocate in the signals group, or even go for those highs which we don't know if they would be hit. Let's extend that and just watch it together. Probably they are not hit, but yeah, as you see, they are not hit in this occasion, but you would have closed partials, as I told you. Of course, this trade went up to a 5-to-1 almost reward to risk. Even that would have been an amazing trade. This is gonna be the first lesson. We wanna see, first of all, we talked about different time frames in this first lesson, and at some point we will see that we will be using, let's say, 3 or 4 specific time frames only. We talked about that. Specific time frames only. We will not get lost with all different time frames. Secondly, we saw an example only on one time frame, on the 15-minute time frame in this occasion, and then we showed an entry on the 1-minute time frame. And these are very basic concepts to begin this mentorship with, but in the very next episode we are gonna be going through more things. I'm gonna show you exactly as we saw here with the liquidity grabs. We are gonna see what the optimal entry would have been in here, and the optimal entry was down here, and it is the entry that I showed you at the beginning of this video, the one that we also took. And I took it live. This happened to be in a live trading session, but mostly I'm going live in my private Telegram group. Now, is there more value for you to join the ChrisFX Academy? Absolutely. To join the ChrisFX Signals? Absolutely. To join a one-on-one mentoring with me? Yes, of course, and you can ask my other members. You will get 1, 2, 3 rules, you follow those rules, keep the risk management, let the numbers play out. It's all about psychology after that. But is this gonna be a very good starting point, or are these free mentorship episodes gonna teach you way more than you already know? 99% sure that they are gonna teach you more than you already know, and they are worth every single bit of them. So go ahead, subscribe to this YouTube channel, follow every single mentorship episode that we're gonna be making. My aim right here is to make these episodes explode on YouTube. Share them with everybody, your friends. Of course, if your friends are traders, otherwise I don't think they're gonna be interested in what we're teaching here. I want those episodes to explode because I want to bring truth back into trading, and for those of you who are following me, you know how transparent I'm being. As a matter of fact, for extra proof as of the making of this video, this is something that I showed live on the 29th also. This is the 29th of September 2023. I was live, and you can find the live on YouTube. This was one of the weeks, the last week right here, with the weekly report that I'm sending in the Trading Signals group. And of course, this happened to be an extremely high winning percentage for this week. Not every week is a winning week. Okay, this just happened to be a win, and this is my personal account, which I show again and again. So hopefully this was a very nice introduction for you guys. I will be seeing you in the very next episode. The SMC Trader signing out.